Welcome back. This video is for you if you are struggling to identify setups, okay? If you can sit on your hands and be patient and wait for the market to show you its hand where you can very clearly identify the easy setup, then you can make a lot of money, right? But it's all about patience, and many traders don't have that. They don't have the patience that's required, okay? So this here is this morning's session, Asia session, and we've already come into London as well. This is on Thursday, 17th of April. Okay, now let me turn on the sessions. So this is Asia, this is London. Okay, now I want you to look at a couple of things here. So the market opens here and pumps up. Okay, then there's a pullback, and that pullback comes into this fair value gap, right? Now this is happening at 8:30, right? Markets pull back at 8:30. This is the next candle, basically 8:45, 9 a.m. candle. Now I took a long here on a short 1 minute time frame, and I was targeting these highs, and the trade was in really good profit, okay, up to there, over 100 pips. So in VIP, we have some guidance where if the trade is in profit by 50 to 75 pips, then you put it to break even, okay, and then you let the trade run to TP, right? Now, I don't typically do that. I want to hit the TP or take the stop loss. That's my personality, okay? But this particular movement came back down so quick that I could tell that I was going to hit stop loss. So if I show you just very quickly the 1 minute candles, you can see there, you see how quick, how aggressive these 1 minute candles were, right? And so I saw that, especially this one, coming down really quick, and so I was able to close my trade out. Now, that's not the lesson, that's just giving you some context in what I was looking at for the day. But the easy trade is this, and I'm going to walk you through this now, okay? Because if you can just sit on your hands and be patient, look for these easy setups, then trading will be really simple for you, okay? So this move down, right, is a very aggressive move with displacement. You can clearly see it's aggressive. Now I'm going to turn off these lines and these things so that we're not distracted by everything on the charts, okay? And what's important in this aggressive move down is that we have a fair value gap. That's very important because you need that. That's going to be your frame of reference, okay, on this 15-minute chart, okay? Now you've got to look at what's going on here. So this is basically the 9 a.m., right? This is the 9 a.m. to 9:15 candle, and this then continues down, right, for 45 minutes, okay? And it's left this fair value gap, but that's very important. I'm going to tell you why in a moment. But what's more important is where has this closed, okay? There's a couple of things going on here. Let me show you a 4-hourly chart. So I want you to really pay a close attention, okay? We're talking about this candle, right? This one here. It's come down into this 4-hourly fair value gap, right? And it's completely engulfed this up candle, okay? That there is the change in state of delivery of price. Okay, that's number one, right? But it's a little bit tricky because it's also pulling back into a discount, right? 4-hourly fair value gap is a discount. However, because we've had this entire candle engulfed, that kind of sets the stage for lower prices. Had this just, crawl down, maybe across 2 4-hourly candles, or didn't completely engulf and kind of wicked down and then moved up, then that would have been a valid down movement into the 4-hourly fair value gap for higher prices. Okay, but the fact that it closed below this up candle kind of sets the stage for lower prices, okay? But even that's not what I want you to focus on, because I'm trying to make this really easy for you, right? Have a look at where this is closed, okay? And I'm going to open up the lines, and you can see that right there. Ignore all this on the right-hand side, right? You can see absolute clean equal lows, right? It's left liquidity intact, right? So people who are long the market from all this move, with this move down, haven't been stopped out yet, right? They've got their stops here under these lows, okay? So there are sell stops under here that this particular move down did not take out, right? And so you need to pay attention to that. You need to realize the market has left that liquidity intact equal lows. So the new 4-hourly candle opens up, and this is why you must have this bearish fair value gap on the way down, because that's where you're looking for this pullback to come into, right? And that's where you can take a very high probability, low risk short entry. Why is it low risk? Because number one, you want the market to respect the midpoint of that fair value gap, okay? And so if it goes in the upper quadrant, then you can potentially close the trade out for a very small loss. Or even if it goes above a little bit, there you can have you stopped a little bit above, right? That's why it's a low risk, high probability setup, because you've had an aggressive move down with a fair value gap. You've got equal lows, right? They have left sell stops intact, and this is just a pullback, and it's a new 4-hourly candle. And you can see the pullback comes into that fair value gap, midpoints respected, okay? And you can see right there, London opens, okay? takes buy side, right? Where people may have already shorted and they've got their buy stops, right? Sometimes traders put their buy stops immediately when you get below this lows here, right? Or they put their stop to break even. This 1 a.m. candle has taken buy stops, okay? And still respected the midpoint of that fair value gap, right? That's your low risk, high probability, short entry targeting these equal lows. How easy is that? From there down to there, 200 pips plus, right? So that's what VIP did today. There were students in this trade. Not everybody held to those lows. Some took it off at 100 pips, 150 pips, 200 pips. It's up to the student. But that's a very, very easy, low risk setup, okay? And I've already posted my setup for that trade. It's right here. You can see it there on Twitter because I journal all of my trades on Twitter and on my YouTube profile, okay? So easy setup. If you're struggling, look for those types of moves where it doesn't matter about direction. You've got clear displacement in a particular direction. You have a fair value gap as part of that displacement, and you need that because that's going to be your entry. You need to be patient and not jump in early, right? Sometimes I jump in early and then I've got to sit through the drawdown. But 9 times out of 10, I know I'm correct on direction, so I kind of hold it. But that's, not the best thing to do. Now, that happens to me sometimes, not all the time. But so I jumped in a bit early, had a bit of drawdown while this was pulling back. Okay, so let's understand what the setup is. Okay, you've got that initial manipulation, this move up. That's the initial manipulation, getting everybody long in this market. I was long in this market because it was a good setup on a smaller 1 minute time frame, right? But I was quick to identify the aggressive move down, and I was able to exit. But I had a good buffer. I was already in profit by 134 pips, so I had a good buffer to be able to exit before this big dump down. Okay, so my longs were closed out for a break even. Let me actually show you in the group chat where I was already long. Right there, I posted it. You see that? I was long and in profit by $4,500, and you can see it was almost at the target. How close was that to target? So when this came down, right, it came down really quick, and so I was able to take it out at break even because I had such a big buffer. You can see my entry right there. Right, that blue horizontal line, almost was able to close that out. But anyway, that's irrelevant, okay? And there are students, let's say there's a student who took the short, right here, okay, from that fair value gap. Now, this student closed out a little bit early, and that's okay. It doesn't matter. He's locked in 100 pips, right? 100 plus pips, okay? And that's what it's about, right? So how easy is this? Now, let me walk you through the setup. I haven't finished walking you through the setup. So you have the initial manipulation, and you don't care about any of this. You're just watching the market. You're just waiting patiently. What's going on, right? You're not jumping in. You're seeing all these candles go down on a 1 minute time frame. Let me jump to 1 minute time frame. There were big candles on that move down. There it is there. Violent candle. Let me actually just make this bigger so you can see, right? So you don't care about this, all of this, right? Watch it on a 15-minute time frame. All you care about is the setup that I'm teaching you. Initial manipulation, massive move down. Great. You're not concerned at all. You're just watching the market. Must have a fair value gap. Now, this one's a bearish setup, so on this occasion, you must have a bearish fair value gap on a 15-minute time frame, right? If it was going the other way, then you've got to obviously have a bullish fair value gap, okay? But I'm giving you an example of a bearish momentum move. Okay, so there's two things I've told you, right, that you need to take note of. Manipulation, okay? Aggressive move down, right? And third thing, must have a fair value gap on that aggressive move down. Now, the most important thing, the absolute most important thing is where has that move stopped? Right there. It must have liquidity, right? It must leave liquidity. So in this case, because this is a bearish move down, it's left sell side intact. So depending on the direction you've had this aggressive displacement, you've got to have liquidity on whatever side the market's moved, right? So it moved down and it's left equal lows. You must have that. If it's gone down through those equal lows, that's it. This trade's void. This setup that I'm trying to teach you is void. So you must have all of the things that I'm mentioning here. This is one complete package, right? This is a complete setup, okay? So manipulation, displacement, equal lows or some kind of liquidity, okay? And a fair value gap where the market must be able to pull back into. Your entry is going to be when the market pulls back into this fair value gap, right? As soon as it pulls in, you can take your short setup or you can watch and see if you can get a better entry, okay? But your entry should be at a session time, okay? So here, 1 a.m. start of London, right? It takes buy side and respects the midpoint of that fair value gap. That's important. You don't want to see body closures on a 15-minute chart above the midpoint of the fair value gap. Now, your stop can be in the upper quadrant, right? If you split this fair value gap up into 4 quadrants, then your stop can be in the upper quadrant or just somewhere above that fair value gap. Because if it goes up there, it's void. Just give yourself a little bit of a buffer. Okay. So that's it. That's your entry. I've spoke about stops. Okay. I've spoke about what you need in terms of liquidity, displacement, fair value gap, manipulation at the start of this entire move. And your take profit is just 1 pip under these equal lows. So just a couple of pips under this bar here. Okay. And that's it. Now you can take your stop here, your profit there, right? 160 pips from entry. You don't have to get the ultimate target. You can take partials there, put your stops to break even, and then take the remainder, just 1 or 2 pips under that low there into that fair value gap under those equal lows. That's it. That's the setup, right? So if you're struggling, that's all you have to wait for. Whether it's a move on the downside or a move on the upside, okay, you need to have that displacement, wait for the pullback into a fair value gap, must have liquidity beneath that you're targeting, equal lows or equal highs, depending on which side you had that displacement. Enter inside the fair value gap, watch the midpoint, timing's important, right at the open of London, buy side's taken, straight down to equal lows. You don't have to wait for the ultimate target. Take your 100 pips or 150 pips, whatever you want, close your trade, walk away, go and play. Hope the video is useful. I will now talk with you in a future video.